Let me ask you then about where
Morning.
you sit on the growth versus value trade. A lot of people have been talking to us recently about how value was going to be to the fore as a result of discovery of the vaccines. We had a little wobble on that narrative yesterday, perhaps, because of a reminder of just how tough the winter was going to be here in the UK and in parts of Europe. Where do you sit then as we head into 2021 on the value versus growth debate?
Yes, we think that there's definitely more room for value to rally, but probably more likely to be a next year story, perhaps from the middle of next year. Because what we have now is, as you say, a reminder that actually in the short term, people are still very cautious and still remain very sensitive to the virus development. And as a result, we see basically growth is still going to perform well because of the low interest rate environment and the structural shifts to tech, for example. So we are probably going to see a bit of back and forth between the outperformance of value versus growth. But I think the more sustained outperformance of value will probably come after we get a certain immunity of the public and more sustained recovery in the economy and the health front. So before we see that, we're going to see back and forth.
Yeah, I suppose two things come to mind. One is don't we expect markets to discount that move, Janet? So to think about that ahead of when it comes. And secondly, if we are talking about getting back to value, I mean, even before the pandemic, if we can possibly imagine a world before the pandemic, I remember talking about whether value was going to come back, and even then it seemed to be challenged. So what makes you so sure, A, about the timing, and secondly, that we are going to see that pivot into value?
Yeah, it is very hard to get very certain on the timing, basically. But we all know that reflation trade has to be driven by the eventual normalization of the economic activity, and that itself presents a lot of uncertainty. And well, if you look at a lot of the economic forecasts from, say, the IMF, the OECD, they start to expect a more sustained kind of recovery from the middle of next year onwards in the base case scenario. So that's a time when we can start to expect better economic growth. And of course, again, that timing is uncertain in itself. And that's why we're saying that it would be a bit of back and forth between the outperformance of value and growth, but we probably will have more certainty on the sustained better performance in growth in general, if you're talking about a multi-year trend, because we're still going to be in a low interest rates environment. And that is the thing that we have the most conviction on, basically. Basically, we think that risk assets should continue to perform well in a low interest rates environment. And of course, there will be selective sectors would even outperform better in a growth environment.